How can you identify the most important and the most powerful levels of structure that give you the best chances of capturing trends and banking in massive profits? Welcome to the Trading Channel, guys. My name is Steven, your honest trading coach. And in today's video, you're going to be learning how to identify the most powerful and most important levels of structure that give you the best chances of banking in massive profits. In just a few moments, I'm going to be sharing with you guys some extremely valuable information that could be what you've been missing in your trading all along. So if that sounds interesting to you, then go ahead and click that subscribe button, click the notification bell to make sure you're alerted whenever we come out with videos like this. We do a tutorial video just like this each and every week, along with a Monday market breakdown video discussing a few trade ideas every single Monday. YouTube does take a couple of days to notify you after you subscribe, and even if you hit the notification bell. So if you'd like faster alerts about those Monday market breakdown videos and to receive some other free training from us, then head over to thetradingchannel.net and sign up for our email list. While you do that, I'm going to let the intro and disclaimer roll. Go ahead and click that like button for us to help support the channel, and I'll see you guys on the other side. Welcome back, guys. So first off, let's actually talk about why you should be interested in learning how to identify these powerful and important levels of structure. Well, for starters, here we are on the Euro-Yen daily chart. And on this chart, using exactly what I'm going to teach you today, would have banked in over 800 pips on this move right here. We also would have banked in over 600 pips on this move right here using this analysis. And we're actually coming up on a possible short trade using this analysis at the moment, but we'll discuss a little more about that later on in the video. And we'll also be taking a look at this on multiple time frames and multiple different pairs. This is not something that only works on the daily time frame, and it's definitely not something that only works on a specific pair. This is just knowing and understanding market structure and how the market moves. So let's go up to a blank chart. So let's discuss a little more about structure. Let's imagine you're getting on a plane and you're going from Atlanta, Georgia, all the way to California. And I know you're probably thinking, what does this have to do with structure? But I promise it's going to make sense in just a moment. Let's say you start to take off here in Atlanta. As your plane's on the rise, you hit small amounts of turbulence on the way up, small amounts of turbulence on the way up, and then the plane drops 500 feet out of the air before taking back off again. And it does that once more. Tell me something. In this scenario, are you going to remember these tiny little moments of turbulence? Probably not, right? Will you remember these very large drops and moments of turbulence? Yes, you're going to remember those, right? Well, this is exactly how the market works as well. In order to spot major levels of structure, we can't be looking at these little tiny pullbacks that would be the small amount of turbulence you would hit on your way up to cruising altitude in a plane. What we want to be looking for is spots that the market's going to remember. Again, imagine it as a plane. What are the spots you would remember of turbulence if you were taking off an airplane? You want to find those areas, and that's where you want to draw your resistance and support lines, right? These are going to be the major and powerful levels of support and resistance. And we're going to discuss a few other conditions that we're going to apply to this as well. It's not just the fact that we have large moves down. Something else we need to pay attention to is the fact that in a trending market, trending being higher highs and higher lows, the very most important level of structure in a trending market is always going to be the most previous level of structure that was broken right here. So if we have a trending market, the most important and the most probable area you have to find an entry reason and capture a winning trade that's going to equal massive amounts of profits is right back at the previous level of resistance. Now, just implementing this could completely turn your trading around. This can completely change your trading. And why, you might ask? Well, because before now, you've probably been looking at tons of different structure levels in order to try to figure out what's major, what's minor, how are we going to trade around it? Well, what if you only looked at previous structure resistance that was just broken for possible support? How much more simple would your trading plan, would your strategy be if that was the case? Exactly. So not only this, what we're also going to implement, and what I'm also going to be teaching you guys today, is how to spot very important levels of structure that happen after consolidation. So the most important for a trending market, of course, is the previous level of resistance that was broken. Let's say we have an uptrend. The previous level of resistance that was broken is going to be the most important and most powerful level of structure we can find. Now, let's say we're at our cruising altitude, hit a little bit of turbulence up here. That's probably enough of the airplane analogy, honestly, so we'll just continue here. But then let's say we get this drop right here. If we were using the airplane analogy, we're heading down to the landing strip. After this drop, something we can pay attention to. Again, we're looking at the most recent level of structure that was broken. What's the most recent level of structure broken? Right here. But here we have even more power, an even more important level of structure. The reason being because this was previously a level of consolidation. We have multiple touches in this level, so once the market breaks through that, that's going to be a very accurate, a very powerful, and a very important level of structure to pay attention to for trading opportunities in the future to push the market down. And as we go into trend, what we're going to be looking for is just the most previous, nothing else, only the most previous level of support that was broken in a downtrend. So once we have that most previous level of support that was broken in a downtrend, we can place a horizontal line there. You can just watch it on your chart, wait for the market to get there, provide you some kind of reason for entry, and push back down. Now tell me something. Would that be a level of significant structure? Would that? No. These two levels would not be significant. You would not remember that as turbulence if you were coming down to the landing strip on your plane ride. And we actually need rules to try to define these, right? Or at least outlines of what these smaller levels are. We need outlines of what we can actually count as major structure support and resistance. The way I like to do this is if these little areas are 2 or less candles and they do not retrace a very large amount, let's say more than 38.2%, this way you can actually use a Fibonacci. So if this right here is not a 38.2% retracement of our high to low move and it's less than 2 candles, then this would not count as structure. So that's just a brief overview of how you would create rules for that. That's not something we're going to dive into in this video. It's a little more complicated stuff that we discuss over at the EAP. So I know that may have been a little bit drawn out, but hopefully now you have a really good understanding of what we're going to be looking for in today's video and how we're going to be spotting these important and powerful levels of structure. Now we'll go down to the charts, take a look at a few live examples of this. And later on in the video, I'll be showing you guys an indicator that you can combine with this analysis that can increase the probability of hitting these massive trades even more. So make sure to stick around till the end for that. Let's go ahead and go down to some live charts and take a look at a few examples. Okay guys, so here we are back on the Euro-Yen chart, and now we're going to discuss this analysis once more, now that you have the knowledge we just discussed with our airplane analogy. But before we do that, just to show you guys that we actually trade based on this type of analysis, I'm not currently in any open positions using this type of analysis, but we did have a trade on Monday in the EAP training program using this analysis. So let's go ahead and go over to that email. Right here's that email that was sent out to traders 3/6, which was Monday. And as you can see on the chart in front of you, what we had here was a break above a previous resistance while a market was in trend. This is our previous resistance, and what we waited for is the market to pull back to that resistance level before opening a position to go long. We ended up getting first targets hit on this trade for around 82 pips. We'll head over to the dollar Canada chart and show you guys the profits on this. And guys, if you'd like to learn more about how to get emails like this 3 to 5 times a week and join us in the EAP training program, then to learn more about how to do that, there's a link in the description labeled EAP training program. Heading back over to the charts now, let's look at the dollar Canada. We'll go back over to the email, scroll down. As you can see, our first target was at 1.2999. If we go back over to the dollar Canada chart and place a horizontal line at 1.2999, as you can see, we barely ended up getting those first targets clipped here on this trade. So that ended up being a win of over 83 pips using the exact analysis we're talking about in this video. As you can see, just to go over it one more time, we have a market in an uptrend, big turbulence here, or that major level of structure, before breaking back above that level of resistance, and then the pullback into that resistance gave us opportunity to enter the market and capture over 82 pips of profit. And now we'll drop down to a 4-hour chart. I'll show you guys just a couple of other examples of this so you can see that it doesn't only work on the daily chart. Here on the 4-hour, I already spot one. We have this push down, big turbulence, right? Consolidation area, 1, 2, 3 touches. After we get a break below these touches, what happens? The market pulls back up directly into that previous level of structure. And let's go ahead and do this on one more pair. Let's go ahead and go to a different chart. Let's do the pound Swiss. This is going to be completely random, guys, and let's go down to a 15-minute chart. So on the pound Swiss, 15-minute chart. Again, this was completely random. I did not look through charts to try to find the best ones for this or anything like that. But here, as you can see, we have a previous level of resistance right here. The market pushes up, breaks above that previous level of resistance. Then what happens? We pull down right into that level of resistance, and so far we've started up into new highs. I would actually expect this to break into new highs and continue into trend continuation here on the pound Swiss. So there's a few other examples on different pairs and different time frames of this working out. Now what we're going to do is discuss a way you can add an indicator to this to actually make this more non-subjective, meaning easier to follow, with a set of rules and even more accurate. So let's head to a different chart and do that now. Okay guys, so here we are on the dollar Canada, and what we're going to do now is just combine a very simple indicator with this structure-based analysis we just talked about in today's video. And I'm going to show you guys how to create non-subjective rules to build a strategy around or to build a trading plan around for absolutely free. So guys, if you found value in today's video, then make sure you go ahead and click that like button for me. And if you find this content helpful and you want to learn more about some of our other paid programs and dive a little deeper into your Forex education, then you can find out more about those by clicking the link in the description labeled EAP Training Program or by going over to thetradingchannel.net. But let's go ahead and apply the indicator here on the dollar Canada. We're on the dollar Canada 1 hour chart, again, changing time frames, changing pairs to show you guys that this works all around. And let's go ahead and apply the indicator now, which is going to be nothing more than a 200-day exponential moving average. So I'll go ahead and let you guys see me edit this so you can see that this is exactly what I'm doing. Make it black so it's easy to see, a little bit thicker, and 200-day exponential moving average. Okay, now that we have the 200-day moving average on the screen, the rules we can apply to make this almost completely non-subjective is the fact that we want to see a market above the 200-day moving average in an uptrend making new highs before looking for that previous level of resistance to become support. Okay, so let's do that here on the dollar Canada. So we get this break above our 200-day moving average and our previous high right here, right? And I'm going to go through this entire chart with you guys. February 16th of 2018, we're going to go all the way to today's date just doing this. And again, guys, I haven't went through charts and tried to find the best scenarios for this. You're going to see losing trades doing this. You're going to see losing trades while we do it on the dollar Canada, I'm sure. I don't really know. I haven't checked, but I'm just going to show you guys the power of this, especially combining it with this indicator and making it non-subjective. So let's take a look here once again. Pushing above the 200, pushing above our previous high right here. What happens next? Well, we get a pullback into our previous level of structure. What did we just talk about? We wanted to get this pullback into this previous level of structure. Was this a major level of structure? Yes, this would have been a large amount of turbulence in an airplane, right? So that major level of structure, after the market breaks above the 200-day moving average and that level of structure then pulls back into it, would be a great place to look for some buying opportunities. We get those buying opportunities, we push up, we do what now? We break above our previous level of resistance, right? That previous level of resistance is right there. Then what happens? This level of resistance, does it look like it would be a spot you would remember on an airplane if you started to take off and had this big drop out of the sky due to turbulence? Yes, right? This level right here, this big drop, would definitely be something you would remember. So it is a major level of structure. After breaking above it, we pull back to our most recent level of structure that we broke. Boom, we pull back into that area, we get another push higher. This push higher breaks above what? Our previous level of major structure. Again, airplane, this would be big turbulence. This is the most recent level of structure that we've broke. If we come across, the market pulls back, doesn't quite get there. Again, it's not going to get there every single time. You're not going to get a trading opportunity every time you break into new highs. But this is the most accurate place in a trending market to capture large gains and massive profits. So let's go ahead and scroll the chart sideways. Now, this is our new level of structure that's just been broken. That's what we're going to be paying attention to. Scrolling sideways. And now we have another new level. Because of this consolidation in through here, this would have been major turbulence pushing down, right? So this is going to be our level of structure right in here, where our line is at 1.268 even. So that's what we're going to be looking for possible trades. Market pulls down into that area, gives us a trade. Boom. Okay, let's see that again. This area, what did I say? 1.268. As soon as the market pulled down into 1.268, we got this massive push up. Awesome. Let's continue. Continuing. Here would be an example of a loss. We have the market pushing, breaking above our previous levels of resistance, pulling back into those levels of resistance. If we would have gotten an opportunity here to enter the trade based on an entry reason, then more than likely we would have been stopped out of that trade on the way down. And now something interesting's happened. Now we started creating new lows. Well, we're not looking for a trade anymore at all until we break into new highs, because we're looking for trades based on our most recent level of structure breaking. So we're not looking for anything. Now we're looking for trades. Why? We just broke above our most recent high. This would not be a pullback we'd remember on a plane. This is not our major structure. This is our major structure. Continuing, looking for trades at 1.266 even. Pulling back now, getting pretty close. That would have been really close to our zone, really. I mean, looking right in here at this previous zone of resistance, and let's see what happens with the market. We get that pretty big push up. Awesome. Next up, we'd be looking right here, 1.271 for possible trades. Market pushes up. Then we break above our next resistance level here. What happens after that? We pull back into that resistance level and push up. And guys, that's all I'm going to do for today. This is going to get really drawn out. I'm sitting here looking at the time on this video, and it's getting pretty long as is. So as you can see, this works on multiple time frames with multiple pairs, and adding that 200-day moving average or your choice of moving average or adding other conditions is not against the rules. You can add any other conditions to this type of analysis in order to make it more accurate for you. If you're someone who's been struggling in your trading for a while and you enjoy trading content like this, or you just enjoy learning about the skill of trading, learning new strategies, entry reasons, learning about psychology, risk management, and all the key factors it takes to actually become profitable as a trader, and you're tired of searching through free YouTube videos to try to create massive success in your trading career, then click the link in the description labeled EAP Training Program. This program's helped hundreds and hundreds of traders throughout the last couple of years on their path to becoming profitable. As you can see from this video, guys, I just really enjoy bringing value to traders and helping them on their journey to becoming profitable, because I went through it too. I went through the struggle of losing money, blowing accounts. I went through the struggle of being frustrated because you feel like Forex is just a scam and that nobody's out here actually making money. But I found a way out of those struggles. I found a way to actually become a profitable trader, and now I really enjoy sharing that information, sharing that knowledge with you guys. One, through free educational content like this, and with some even more advanced training that we offer in our paid programs. So again, if you're interested in that, check out the link in the description labeled EAP, or head over to thetradingchannel.net. Stick around for the outro to see a few testimonials of traders that have been through those programs. Make sure you're subscribed here to be alerted about free content we come out with on YouTube. Make sure you go over to the Trading Channel, sign up for our email list for another free structure training similar to this. I wish you guys the best of luck on your future trades. I hope you have a great weekend, and I'll talk to you in the next video.